Hello everyone, welcome to BISP Solutions. The topic for today under Oracle Tax Reporting Cloud Services is going to be the current tax payable automation and the TAR automation or the tax account roll forward automation. So let's begin. So first we'll discuss about the current tax payable automation and why is it required, what are its uses in the application. So the current tax payable account is a part of the predefined supplemental scheduled accounts which are available in the tax reporting cloud services. It helps us in preparation of the current tax payable schedule for a legal entity as well as at a consolidated level. So the current tax payable schedule includes various movements for the current tax payable account. Some of the movements include the opening balance, the payments during the year, the refunds, if any, which are received during the year or a period, current year profit and loss charge, that is the current tax expenses for the particular period, which will be automated with the help of the current tax payable automation. Then there is the return to accrual profit and loss, which again can be automated with the use of current tax payable automation configuration. And at last, we'll get the closing payable balance of the current tax liability for a particular entity and for a particular period and year. This automation process will help us to arrive at the closing current tax payable balance in the application and prepare a full-fledged schedule of the current tax payable of a particular entity for a particular period. The current tax payable automated form includes the tax payable data for the current year and the previous 6 years data as well. And it also includes a consolidated tab for historic years data as well, which means that we can have the current tax payable schedule and it can contain data for the current year's current tax payable as well as the data for the previous 6 years from the current year and a single consolidated tab for all the years beyond the previous 6 years as well. So we can accumulate the entire data and prepare this particular schedule in the application. So again, just like we did in the tax automation configuration, we'll have to create mappings for the current tax payable automation as well. So for that, again, we'll go to the configuration tab, and from there we'll have this particular automation feature from where we will automate certain source accounts to the targeted accounts, thus helping us to create the current tax payable schedule for the organization. So we'll go to the application and see how this particular configuration will be performed in the application. So again, we'll go to the application whereby we have the configuration card. Under the configuration card, we have various configuration options. From there, we'll go to the current tax payable automation. And we can see that for this particular point of view, including scenario years period, and this is the account, which is the targeted account for all the source accounts which I have. So I have three different movements, which include the current year profit and loss charge, the current year other comprehensive income slash equity automated charge, and the RTA PNL automated charge. So this is the automation configuration from where we will source the data to the current tax payable account and prepare the current tax payable schedule for the same. So Here, what we have done is we have a particular data source, which is the CTP rule 1, which is the current tax payable rule 1, whereby we have, for this particular movement, we have taken the source account as the TRCS underscore current tax expenses, which is the current tax expense for the particular point of view. And we can exclude certain accounts as well. So the accounts which can be excluded have to be the child members of the source account, which we have selected in the first column. So this particular column is an optional column. We can ignore it as well, but the source account column and the switch sign column are mandatory to be filled in the application. So the first column, for the current year profit and loss charge, we have taken the current year tax expenses, and we have excluded the RTA adjustment automated and the equity reversal accounts, because these accounts are then included in the other two movements that we have. So we have excluded them, these two movements from this particular account, and we have included these accounts under the respective movements which are available for these particular accounts respectively. Then we have a switch sign column whereby we can select a yes in case we have to switch the sign from the source account. So my source account has a positive data, but I know that it has to be a negative data in my current tax payable. For example, there is a payment figure. So while automating the payment figure, I'll have to set the sign as negative. So if the payment figure at the particular source was entered in a positive number, I can click on yes. I can select yes under the switch sign, and my sign will be switched from the positive to a negative data. We'll just see where this particular current tax payable account is situated in the hierarchy. So it is a supplemental schedule account. So this will be a schedule for the current tax payable, which will comprise of different movements, and which will include the opening balance and will end at the closing balance. So we will get the entire schedule of what the current tax payable account should look like for a particular period or a particular year. And we can trace all the movements which have happened in the current tax payable account during the entire period for which we are working on. And in that manner, we will be able to prepare a total schedule for the current tax payable. So this was the backend configuration. We'll come back to it again later when we will prepare our own configuration. This one was a preceded configuration. So we'll again go to the homepage, and we will see how this particular form or this schedule for which we are talking about, the current tax payable schedule, looks like when it looks like from the front end. So what we saw was the backend configuration. We'll uh, try to see how this particular schedule will look like once all the configurations have been done and the data has been mapped. So for that, we will, in the tax provision national cluster, we'll open the TAR form or the tax account roll forward card. So under my tax account roll forward card, I have various tabs available here. So the first tab that I have is the TAR tab, to which we will come back uh, again later on in our session. First, we'll check how this particular tab, which is the current tax payable automated form, looks like, and how this particular schedule helps us to get to the closing balance or the appropriate closing balance of the current tax payable for a particular entity. So we have selected the year as FY21, for which we saw the automation which was done under the configuration tab. And now we are seeing the front end of this particular form. So like we saw in the slides, we have the current year. So since I have selected the year as FY21 here, my current year is FY21, and I have 6 previous years before the FY21, and I have a historic year as well in which I can directly input any data or any opening balance of the all the previous year which were before FY15 in our case. So right now I don't have any data in the years FY19 till FY15. I have a data only in FY20 and FY21 for this particular point of view. So we'll see, first we'll go to FY20 and we'll see what data do we have in that particular form for this particular year. So now you can see we have the current year changed to FY20. I didn't have any opening balance because, as I told, I have started to load data from FY20 only. So I am not having any data in the opening balance column. However, I have the current year profit and loss charge, which was my provision for the current period. So we can just cross check it as well, because we have mapped the current year provision to the current year profit and loss charged automated. So I'll open the current provision form in another browser to see whether this is mapped appropriately or not. So for that, I'll go to the package. Then we have the current provision form here. So we'll check whether the amount is the same. So this is the year for which we are checking the current provision. So my current provision total for this particular year and period is 5654350, which has been mapped to the current year profit and loss charge automated for this particular schedule. So this is my current year provision, which has been sourced to the current tax payable account for this particular schedule to be prepared, and the movement selected here is the current year profit and loss charge automated, because this is routed through the profit and loss account in the financial data. So this was my provision, or this was my tax liability for this particular period, and I have paid this much amount from this particular liability which I had. So I can input this data here, either here, or I have another column for it, which is payment details, which is getting rolled up from this particular form, which is the current tax payable details form. So this form contains the entire data for the payments that we have paid in relation to the tax liability for different periods and for different years as well. So in case I want, I can input, say, some data here, which will get rolled up when I click on save. So this particular details form will be like a register where we can maintain all the details about the payment of taxation for different years and for different periods. And this can get rolled up to the current tax payable automated form as well. So for the result to be shown here, I'll have to run consolidation, as this particular tool is linked with the consolidation business rule as well. So we'll have to run the consolidation for this particular point of view. Now we have a 1 lakh US dollar figure in the payments detail column as well. So in case we have the option, we have two options. We can either input the payments data in the current tax payable detail form, or we can manually input it for each and every period in the current tax payable automated form itself. So now we have the total payments during the year FY20. We have the current year profit and loss charge from the current provision form, which is the current tax expenses for the current period. And then we have various other movements as well. So we didn't have any opening balance, but we have the payments for the period. We don't have any refunds for this current year, but we have the current year profit and loss charge, which is my current tax, which I am liable to pay. Then we don't have any other automated movement as well. We will see these movements in the next year, because we have mapped it for the next year. And the last movement which we have is the payable closing balance, which will be the difference of the liability which I was bound to pay and the amount which I have paid. So I am still liable to pay this much amount to the authorities. So in this manner, we will be able to see the liability for a particular year and period by creating a current tax payable form. And we can automate three movements that we saw in the configuration tab in the backend. So we can configure the current year profit and loss charge automated and link it with the current provision or the current tax expense for the current period. We can also automate the current year equity automated amounts. So some of the taxes which are routed through the equity or the other comprehensive income rather than from the profit and loss, these can be automated as well. And we can also automate any additional charges for the taxes during the current period, which are the return to accrual charges. And then we have certain other options as well, and we can get the closing payable balance of the current tax for the current period. And we'll have to note this number. So this number, which is 1554350, which is the closing balance, will now become the opening balance for the financial year 2021. So now we'll check the data for the financial year 2021. And before that, we will go to the other browser and we'll just check the configuration for the FY20, because we didn't do it for FY20. We checked the configuration only for FY21 before checking the current tax payable automated form. So we'll again just check it. So for this particular scenario year period, the account current tax payable, which is my schedule for the current taxes, has only one mapping done, which is for the current year profit and loss charge automated movement, whereby we have sourced the current provision account, which is a tax account, and we have switched the signs as well. And we do not have any mappings for the current year OCI or RTA in this particular year. But for the year financial year 21, like we saw before moving on to the form, we have the mapping for all the three movements in this particular case. So we have the mappings for this is the same account that we have mapped for the FY20. Only the difference is that here it is in its original name and there it was in the LIS form. And we have excluded these two accounts, which we have included here for the OCI and RTA. And we have switched the signs here as well. So we'll now check the payable form for payable schedule for the FY21. So like we saw, the closing balance that was there in the previous year now becomes the opening balance for financial year 2021. And for this particular period, was this particular year, we have mappings in all the three movements. So we have got the results in the current year profit and loss, the current year OCI, and the RTA as well. And once all these have been adjusted, we have got the closing balance as 776982 for this particular year, which will again become the opening balance of the next year. So this is basically a ledger, a type of a schedule, or we can also call it a ledger for the current tax payable, in which we can automate three different movements, and we can enter or input certain data regarding the payments and the refunds or any other adjustments that we want, so that we get a holistic view of all the current tax payable balances for the previous 6 years and the historic year as well. So here we have the payments detail, which will be auto-populated from the current tax payable details form. So we just check. So we have data which is input in the P12 in the current tax payable detail form, which is getting rolled up in the current tax payable automated form. We have entered certain refunds which we are bound to receive from the authority. So we have input certain refunds. Then we have the current year P&L charge automated. So we'll just map it and check it from the current provision form. So we'll again go to another browser and check whether the correct mapping has been done. We'll again go to package, where we will check the current provision for the financial year 21. So for financial year 21, we have the total current provision as 4924320. So I'll just write it down. So we have the current provision as 4924320. Although in the schedule, what amount we have got in the particular movement is 6231883. So why this account is different from the account in the current provision? The reason is that we have excluded two of the accounts, which are the equity and RTA accounts, from the current provision account. So we'll have to add back those two accounts into this account to get this particular figure, because this particular figure in the current provision form is netted off with the RTA and equity to get to this figure. So we'll add back those two accounts and we'll see that the figure will match then. The reason is that because while mapping, we excluded these two accounts from the current provision account. In case we won't have excluded it, we would have got this figure only while generating the current tax payable schedule for the period. So we'll just drill down the additional taxes, where we'll have the RTA, the return to accrual current tax expenses. So, and we also have the equity reversal for national. So when we'll add these two figures into this figure, we'll be able to map the data appropriately. So I'll add 21,000 and I will add 1286563. So now I'm getting 6231883 and I'll just cross check it. So in the current year P&L charge movement, I have the exact figure because those two accounts were excluded in our mappings, and the figure in the current provision was a net off of those two accounts. So we'll have to add back those two accounts to get to the gross figure for the current year profit and loss charge movement. Then again, we have the 21,000, which is the equity reversal figure, which is mapped from this figure from the current provisions. And we also have the RTA, or the additional taxes due to the lesser taxes paid in the previous years. So we have 1286563, which is again mapped from this figure in the current provision form. And lastly, after netting off all these data, we'll be getting 776,982 as our closing balance. And this balance will roll forward to the next year as the opening balance. And another important point to be noted is that we'll have to run the business rule of consolidation each and every time we have done any of the mappings for the current tax payable schedule under TRCS. Now we have understood how the current tax payable schedule works. We'll also see that we can roll forward the mappings of the current tax payable rules that we have created. So we'll just check it once. We'll again go to the current tax payable automation, and we have the mappings for FY21. We'll see whether we have the mappings for FY22 as well, or we do not have the mappings. So we don't have any mappings for the financial year 2022. So in order to roll over the same mappings, we can simply go to the copy configuration and select the designated source. First, we'll check the current tax payable automation rules because we want to roll over them or copy them. So we'll select the scenario as actual under source. We'll select year as FY21. We'll select the period as P12, and we can roll it over or copy it to the desired target scenario year and period. So this was all about the current tax payable schedule, which helps us in preparing a full ledger or a scheduled view for the current tax payable, which includes the opening balance, the movements during the year, and the closing balance. Now we will move on to our next topic, which is the tax account roll forward automation and its uses in the TRCS application. So the TAR, or the tax account roll forward feature in the tax reporting cloud services, enables us to create a journal entry for the current expenses provision for the year. So from the current provision form, we are able to get to the current provision or the current tax expenses for the period, for a particular period. But that account in which we have the tax or the current tax data for the particular period is a tax account and not a book or a natural account or the financial data. It is a tax data, and it is stored, or the current tax amount is stored in the taxation account. But since it is a provision or it is a tax expense, we can say we'll have to create a journal entry for that particular tax expense and for that particular period in the financial data as well, because we ought to pay it from the entity. So we'll have to first book the expense or create a provision, actual provision in the financial data as well. So it is a feature which will post the journal in the financial data or the book data from the tax accounts or the tax data. Once the appropriate computation of the current and deferred taxes have been performed via tax automation feature, which is available in the application. So we have done the tax automation feature. Once the tax automation is performed, the consolidation rule is run, the taxes have been calculated, the tax data will be stored in the taxation account, the current tax expenses account, which is a tax account in our application. But we'll have to book the same tax account, or we'll have to move that tax account to a financial account or a book account. It is a similar process of what we did at the first place. So in the tax reporting cloud services, first we have moved the certain book data by creating the tax automation rules to the taxation accounts, namely the permanent differences accounts, the temporary differences accounts, in order to create the appropriate current provision for the current period. But now what we are doing is the opposite of what we did. So once the provision is created in the tax account, we are moving that provision to the financial data. And that process is basically the tax automation roll forward process. And we will be automating the same in the application. So just like we have sourced the book data first to the taxation related accounts via the tax automation feature, we will now bring the current provision figure to the book data to correctly record the provision amount in the financial data. There is a separate out of the box form available in the sample application where we can check the entry which is transferred to the current tax expenses federal account, which is a part of the financial accounts hierarchy in the sample application. So this particular current tax expense federal account is a not a taxation account, it is a financial or a natural account. So it will be under the financial data hierarchy. We'll see that in the application as well. So the data will now, through the TAR automation, will be rolled forwarded or will be moved, mapped from the taxation accounts to the book accounts. So we will go to the application first and see the TAR automation form first, and then we'll check how the configuration is done for that particular form. So we have under tax provision national, we have the TAR card. We'll just open the TAR card. Under TAR card, we just saw the current tax payable feature. So this is the particular schedule. And we also have a TAR specific form. So we go to that. So you can see that there is no option in this particular form for any kind of input data. So all of the data has been mapped and roll forwarded into this particular data form. And here we have various columns. First, we'll select the year FY20. So under FY20, I have the automated total for the current tax expenses, which was 5654350, which we have seen in the current provision form. We'll just check it, and again we'll open that particular form. So we already have it open. I'll open it again. We have 5654,350 in the current provision for FY20, and we have the current expenses as a 5654,350 as well. And the same is my ending balance as per the tax account, and ending balance as per the book account is zero in this particular case. So I have not booked any amount beforehand or before creating the provision through the tax automation feature. I have not loaded any provision in my financial data till now. So in case I would have loaded any data into my financial accounts for the current tax expenses, it would have been shown here. So we'll see that for the next year. But right now for FY20, I have not booked any amount in my book data, although I have this particular figure as my taxation data. So the difference comes to 5654,350, and for the difference, uh, we will be passing the journal entry. Because no entry has been passed, the system will automatically pass the journal entry. We will not be required to create any journal, but there is a particular out of the box data form by the name of journal. So we'll check that data form and it will show us uh, an entry for this particular amount, since no entry has been posted till now in the book data. So we'll be able to see that particular journal in that data form. So we'll just go to that data form from the other browser. We'll check for journal. So under TAR folder, we'll be having the journal entry data form. Here we have the current tax expenses federal account, current tax expenses US state, and the total. So since I have not posted any amount in this particular account, which is the current tax expenses federal, which is a book account, we'll check that in the hierarchy as well. So through this particular roll forward feature, we have got this amount, and this amount is now posted to the current tax expenses federal automatically because of the TAR automation which we have run. So it was already run for this period. We'll run it again for some other period. So since it was already run, we have this amount posted into the current tax expenses federal account, which is a book account. So we'll check the hierarchy of current tax expenses federal under the account dimension, and then we'll be able to get an idea of where it is posted. So you can see the main parent is FCCS underscore income statement, which is a book account since it is an FCCS account, and my current tax expenses federal is a child under the hierarchy of the FCCS underscore income statement. So these all are my book accounts, and the accounts which are beginning with TRCS underscore are my tax accounts for this particular sample application. We can create our own hierarchy as well, but this particular account is my roll forwarded account, which roll forwards my taxation data to the financial or the book data. And how this happens is that we have to assign a custom attribute to all these accounts which are getting rolled forward from TRC from the taxation to the financial data. So we'll just view the custom attribute which we have assigned. The custom attribute goes by the name of TAR book account national because it's a national jurisdiction scenario. And under TAR book account national, we have various options. Since this was a current tax, we have selected the current tax account roll forward. In case it would have been a deferred taxation, we would have selected the deferred taxation roll forward, and other options are there as well. So we'll have to assign the custom attribute. Once the custom attribute is assigned, the journal will automatically be created once we run the tax automation, or once we run the TAR automation rule through the application. So all these are the mapped up accounts. So the different taxation accounts have been mapped from the other taxation accounts to then roll forward the data into the book accounts and create a journal entry in the book data. So we'll just check the configuration or the backend of how these accounts have been mapped in the application. So we'll again go to the home page. We'll check the configuration. And now we will go to the TAR automation. And we'll first check for the financial year 2020. So here we have for this particular account, which is the current expenses account. So I'll just open the TAR form as well in another browser so we can get a combined view of both the backend and the front end feature in the application. So here I am again at the TAR form, and this is my current expenses account. So the current expenses account is selected here as well. We can select multiple accounts by opening it and entering, say I want to see the deferred expenses as well. So I'll select the deferred expenses as well. However, the performance will then deteriorate because of selection of the multiple accounts here in which we are mapping the data. So I'll just click on go, and now you can see that the deferred tax expenses account mapping is also available. And in similar fashion, we can select n number of accounts, any number of accounts that we want to map here. So I'll see the mapping. Mapping is done movement wise. So the automated movement, we have mapped it from the current provision account, which is the this particular data 5654350. This was present in the current provision. So we have selected the source account as the current provision for current expenses. This is my TAR account and this is my tax account. So we can say that this is the roll forward account through which we will be roll forwarding the data to the book data. And this is the tax accounts which were used for tax automation rule. And these accounts are used for TAR automation. So we have different taxation accounts for different purposes under the TRCS application. So we have sourced it from the tax automation accounts, which is a current provision. For regional, we have sourced from the regional current provision. The data source was tax and the movement at the source account was also automated. Similarly, if we scroll it down for ending balance, we have the source data as current tax expenses federal, since it was 0 initially. So we do not have any ending balance as per book because it is a book data. We do not have any input figure there. So we do not have any data under the source book closing. So we have 0 or we have nil as the mapped figure under the ending balance as per books. In case there would have been any data, we would have got that data here, and then we would have got a difference in the next row. And similarly for the deferred expenses as well, we have different automations which are mapped from different accounts. And generally, the main account for deferred tax is the deferred tax total, which was used in the tax automation feature. So that have been mapped from those source accounts. Another form for configuration, we have the TER automation book balance. So here, what we can do is we can edit the current tax expenses federal account. So we'll just come back to the TER automation once again. So under TER automation, for the ending balances, we had no option to edit this particular rule. However, this source account can be changed from the TER automation book balance. When we change this account from here, the same changes will be present under the ending balance movement for TER automation as well. And one more feature for TER automation, when we go to the actions icon, we have a default mapping option. So this itself is the default mapping. So in case we want, we'll just click on this and we'll again get this mapping only. So this is the default mapping, which is sourced, which is an out of the box mapping, we can say. And we can change this mapping as well as per our requirement and as per the uses. But in case we want to keep it the same, so we can just go to actions and we can click on override default mapping. So we'll get the default mapping. So the default mapping is generated, but it is again the same mapping that was present earlier, because that too was the default mapping itself. So now we'll again go to the TER form that we have. From here, we will now go to the next financial year and see if there is any data which is in addition to the data which was there in the financial year 20. So we will again focus on the current expenses. So under the current expenses, we have the current provision, which is 4924320. We will just check the current provision form for the FY21. We change the financial year to FY21. And for this year, we have 4924320 as our current provision. However, the ending balance as per books this time around is 3000000. So my differential figure now comes to 1924320. So the total provision that I want to create is 4924320. However, already which the amount which is there under in the books is 3000000, and the additional amount, the difference is 1924320. So my total provision is 4924320. And how this amount has been mapped here to the ending balance, we'll just check in the mapping or in the configuration and see what is the configuration mapping for ending balance as per books. Again, we'll check configurations, but this time we'll see for the financial year 21. We'll open the TER automation feature and we'll just scroll to the ending balance. So my ending balance as per books is getting mapped or sourced from the current tax expenses federal account. So for in order to check this, we'll go to the financial data. So we'll go to data forms and we'll check the income statement for FY21 to see whether there is any tax expenses which are already entered there before the tax calculation as per TRCS. So we'll go to the income tax expenses, and here we have the current tax expenses federal, where we already have certain provision which is created with the amount of 3,000,000. So since the mapping is done or sourced from this particular account for the ending balance, we have this data which is present there under the TER form. So this is my ending balance as per book, and the differential data is 1924320. But again, the total provision created will be for 4924320. So we'll again check the sample journal entry. For that, we'll open data forms. And we'll check for FY21. So it is already FY21, and the total journal entry which should be created for current tax expense federal is 4924320, which is my provision, and the total under current tax expenses federal is 4924320, which is my book account, and now it also contains the exact tax provision which it should have had. And similar to the current tax payable automation, we can roll forward the TR automation as well by copying the configurations. We can again go to copy configuration, and instead of creating a configure or an automation a rule for TR automation each and every time, we can just select TR automation rules. We can select the source scenario year and period, and we can select the target scenario year and period, and can copy the configurations to the desired target. So that's it for today. In case you have any queries, you can connect with us at bispsolutions.com. Thanks and have a great day ahead.